Now we have the hourly chart over here, and we have the balanced price range there. And now this chart here is a 15-minute time frame. So we have the market trading sideways ahead of Friday. So we have this consolidation here, and then we have a market report that's due out on Friday. We're anticipating what? The market's not going to top like this. So we anticipate the market's going to do what? Spool higher, going higher, run higher. So at 8:30, when the news comes out on Friday, here's the 5-minute chart here. We have the market rally aggressively here, which is a buy side imbalance, sell side inefficiency, which is the long name for BISI, B-I-S-I. This is a fair value gap by classification. Specifically, buy side imbalance, sell side inefficiency. It means it's buy side imbalance, it's more upside, and it didn't go back and forth to offer sell side delivery. We get partial sell side delivery with this drop right here. In this segment and price action where I told you it's a breakaway gap, that's what I'm zoomed in here showing you on a 5-minute basis. But I want you to think about what is occurring here. At this time of day, at 10:30, after the news driver, we have this swing low here, and it breaks below that. This segment of price action right in here is a fair value gap. It's a SIBI, sell side imbalance, buy side inefficiency, which is the opposite of this over here. So it's offering the market on a sell side delivery, but there is an inefficiency on buy side. So we would anticipate markets like this to reprice up into this candlestick or higher, and then reprice lower. Why? What time of day is it? New York lunch macro. So above this high, we have buy side liquidity, and it's entering the time of day where the lunch macro, which is going to do what? It's going to run for liquidity. Where is the liquidity at for this time of day? Looking at this area here, it's below the lows of the morning. What is that? Right here. This is your swing low right after the news driver hits the marketplace. First swing low here. Everybody that went long or was long before this market report was out, they have their sell stop resting right below that. That's exactly what the lunch macro will do. It'll run from this fair value gap here, drop down aggressively, leaving what? Most of this portion of this open, which is what I've already talked about in a couple minutes ago. This is a breakaway gap. This line right here is this line right there. It's the breaker. So this high, that line is this line right here on the 5-minute chart. This little segment of price action right there, that's a breakaway gap, that's this little portion right here below that low. Okay, so that way you can find your way through the charts of what I'm showing you. If you're not doing this with your own analysis and toggling through, scrolling through each individual time frame while you're watching price action, having every expectation the market's going to be going what? Going higher. So we're seeing even on the 5-minute chart, look at the bodies of these candles here. Are they closing below that breaker line, which is this candlestick's high right there? Even on the 5-minute chart, it's showing you what? That this is being respected. There's no necessity for it to trade back down into this area. So that will be a what? A breakaway gap. That indicates that we're going to see continuous upside delivery, and it's going to draw towards the buy side. That's the next significant pool of liquidity. So throughout the afternoon, we see the market trade higher, come back down in, trade higher, come back down in, some random fair value gap here, and then gravitate, start moving towards the higher high again, which is this here. Okay, we run out of day during the day session. So all of this consolidation, when we resume at 6 p.m., because the market takes an hour break between 5 p.m. Eastern time to 6 p.m., when that occurs, when markets start trading again, the same premise we would have in our expectation. We're not reacting. We're anticipating and predicting price that will eventually gravitate towards this high here. So if you're an overnight session trader, say you want to trade in Asia, say you want to trade in London, you're using these ideas in conjunction with the day and time that you're trading. So where's the liquidity? The liquidity is not changing because you're trading in Asia. The liquidity is not hiding itself and becoming something different and morphing into something else because you're in the London session. Liquidity is there, and it's going to gravitate towards that level. And if this context is here, we focus on moving higher. So let's go a little bit